Hi guys, welcome to today's video, which as you can see there is what to expect running into the weekend. Now obviously the market over the last few days has been lovely, lots of profit to be made. And if you've been following this series this week, my social media experiment, you'll hopefully have made a bit of money from the charts that I've provided over the course of the last few days. But if this is your first time here and this is the first time you've maybe come across my work, please do just pause the video, make sure you're comfortable with that before progressing. And just to throw it out there, that I'm a technical analyst. I'm registered with the CMT Association. I'm working my way towards my chartered status at the moment. Technical analysis is my thing. So you're going to get a lot of technical insight into a lot of charts for the Friday running into the weekend, and hopefully this helps somebody somewhere. And if you do like the video, please do subscribe to our YouTube channel. We try to upload a couple of times a week just when time allows. This week, as I said, it's been pretty much a social media experiment just to see how things go by more regular uploads. So let's get into the charts. Now the first chart that I really want to just touch on is SPY, S&P 500 index. Now running into the weekend, we can clearly see that we have crossed the magic barrier. However, we're now pushing up against all-time highs. Now, one of two things is going to happen here. We are either going to blast through this resistance and we're going to go on and create new highs in the S&P 500, or we're going to meet resistance, and that will correlate with the stocks stalling a little bit. I think that's the theme to really get across here. So I'm going to be talking about a lot of charts that show upside strength. However, the caveat to what I'm talking about is that it's very much dependent upon what happens with the overall market and the individual indices. We can see that the Russell 2000, which I think we do need to see participation from the small caps in order for the overall market to take the next leg higher. This is not a bad thing for the market at all. We're seeing the small caps start to advance and hopefully be rewarded with a breakout come the close on Friday of this candle. Now, first chart that I really want to walk through is Micron Technology. Now, this is a chart that's been moving, beautifully recently. Yes, we had a bit of a pullback. It pulled back to a logical area of support, and I think if we are looking for a new entry into the market, it makes a lot of sense for it to just clear this hurdle, and then I do feel like there's a good 26-27% upside there. Now, whoever it was that messaged me, or emailed me I should say, and thanked me for this chart, no problem. A couple of days ago, I highlighted this as an area of support, and lo and behold, we found support and we're off and running with Ball Corp. Yep, entirely expected. This is what technical analysis does. It helps us just support entries into the market. It can also help those of you that maybe have a fundamental only view. It can help you to identify the optimal entry into the market, into a stock that you believe in. You can absolutely combine technicals and fundamentals, and Ball Corp is one of those that's moved really, really well. Blackstone Group, again, most of you who are watching this will understand that my group got an alert for this a couple of weeks ago, and patience has absolutely been rewarded. We've got the continuation, the breakout, and it's off and running. I do see 27% upside from the initial position, and the expectation for me at least is, well, the hope is that it moves towards this $62 level. Like I said, I'm very, very technical in my approach, and certainly the technical view on Blackstone Group is that it's going to hopefully resolve higher. Apple, again, very, very logical. When we started to see the breakdown of the momentum stocks a few days ago, absolutely advocating moving into the safety areas of tech, which, as you can see there, is Apple. it makes no difference to me that there was an Apple announcement, etc. It's amazing how everything just ties in with the theme of the overall market. And Apple has absolutely rewarded those of you that have taken the entry in here, just like I highlighted back on Monday, that this was an area that you should be looking at. Home Depot is another stock that is performing very, very well. This is the weekly chart for Home Depot, which I feel like is the chart that represents the best fit. We've had a recent breakout and it's off and running. So the expectation with Home Depot is that it should really start to move, I think, towards $250. I think my stance would change on Home Depot if we get a break below that level. I think at that point I would be a little less bullish on the stock. So hopefully Home Depot is something that you want to do a bit of due diligence on. Again, my guys have had an alert on Southern Company in the last couple of days. We had a very nice clean pullback, offered opportunity, beautiful trend. It's up, I think, 45, maybe 50% year to date. So it's outperforming the market and it's moving, as you can see. This is what we want. We want stress-free trading. Those of you out there that are perhaps constantly going back to stocks that just have no clear direction, I would urge you to start to explore this style of trading. It's super stress-free and it's something that just works. So yeah, hopefully Southern Comfort again gives you Southern Company gives you a bit of food for thought. Cisco Corp again, breakout highlighted a few days ago, moving beautifully. The expectation is that we will get a little bit of a pullback on this one, but again, I think the pullback will probably represent opportunity, and it's absolutely something that I feel like you should add to your watch list. Weight Watchers is looking very, very interesting at the moment. We are looking to break out above a key area of resistance. I think if we break above that, I think if we set an alert for $35, I think there's a lot of upside potential there. It wouldn't surprise me in the slightest to see upgrades come in, etc., etc. And absolutely, I think Weight Watchers just simply meets it ticks a lot of boxes, shall we say. Starbucks, again, this is a chart that's been talked about within my group this week, and absolutely it's moving beautifully from this level of support. I have initiated a position in Starbucks this week myself, and I very much like the underlying trend. As you can see there, it's had a beautiful move over the last 12 months, and long may it continue. I think for me, I would really like to see it break above $100. But absolutely, that's the level that I'll be watching next. Now, Roku had a sticky start to the week. I think on Monday, everybody knows when we had this huge candle come in here, a bearish engulfing candle. Absolutely, it was a no-brainer. For those of you that were primed to short the market, and I know there was many of you out there that watched my analysis and actioned a position. Thank you for all the messages. And looks like we've found support. This is a logical level of support for me. I think if you break below $140 and you move into this area here, absolutely, I would be looking to just say no thank you, Mr. Roku. But with the pullback, it was absolutely expected. A stock that runs nearly 600% in 12 months, it stands to reason that you're going to have to deal with some kind of pullback eventually. And this isn't even a big, massive pullback in my opinion, but it's there. It looks like technicals are being respected here, so it's probably offering opportunity, and hopefully, it starts to make its way back to 175. But like I said, below in this level, I'd probably say no thank you. McDonald's, again, if you know what you're looking for technically, offered opportunity again this week. A couple of my guys have action positions, and the expectation is it starts to move towards $220. I think above that, I would like to see continuation and a further breakout to the upside, at which point 250 becomes realistic. But until that, I think you've just got to trade it between this range, and what will be will be. Lam Research. Now, I'm not going to get into the charts of the semiconductor sectors, etc., but there's a lot of positivity, shall we say, with some of the ETFs aligned with the semiconductors. I think Lam Research makes a lot of sense if we see a breakout above this level. Again, I would expect it to move towards 250 in pretty short order. It's not massively looking like it's due for a huge pullback unless we get a complete rejection of this level. For those of you that are in the trade at the moment, it is valid to think about profit taking with a view to maybe buying back in again if you get a further breakout with continuation. So Lam Research, I feel like, is a good addition to any watch list at the moment. Now, to the other side of that, OLED, Universal Display Corp, is clearly in a bit of distress at the moment. I think when we observe the chart here, there was a case to be made that this was going to be the level of support for this individual stock, and the hope is that it would move to the upside. Obviously that didn't happen. We dealt with a rather large drop today, followed by a rebound, so it is putting in a bit of a bullish signal at the moment. I think if you're looking to action another entry into this particular stock, I think you need to get above this 187 level, and it then probably becomes appealing. The one thing you don't want to get caught out with is the dead cat bounce. I absolutely love the terms that we have, and I think that makes a lot of sense. Funko, again, those of you that emailed and messaged, yes, the breakout, I highlighted this one I think on Monday or Tuesday, and it's obviously off to an absolute flyer. So for those of you out there that are maybe trading Funko at the moment, maybe you're holding the position, it's clearly breaking out at the moment, and this is not a bad thing. So hopefully this should now start to kind of grind its way towards the $30-$31 level. When we look left on the chart, we can see that that's a logical area of resistance. So I think with Funko, that's a stock. Congratulations to those of you that got in there. Visa offered again opportunity this week. Again, very, very logical level of support. And again, it always amuses me because I have to deal with a lot of messages and emails on a daily basis, just saying I don't know what I'm talking about, and everybody should just trade on fundamentals only. And quite clearly, when you observe charts, the same things keep happening, and technicals are absolutely respected in the market. And if you're out there and you've got a fundamental only view and it works for you, then that's fantastic. But I think the best traders that I know, they absolutely combine the fundamental view with the technical view, and it's an approach that serves many of my group very, very well, and many professionals that I know very, very well as well. So Visa offered opportunity this week. Salesforce is very close to looking reasonably appealing. I use that with a bit of hesitancy because I don't like the chart. I get asked about Salesforce weekly, what my views are on the chart. I've talked about it already this week. Very clear downtrend channel. But if you get a breakout to the upside, it could absolutely trigger momentum to come in and obviously spike the stock higher. We can see historically that we've got a pretty clear level around the 168, 170 level. So I think if you get a breakout above that, the logical expectation is that it does start to move towards 170. And at which point I would probably look to reevaluate the situation. But it might work on a risk to reward proposition. That's something that you probably want to maybe work out. NVCR again offered opportunity this week. You just need to know where to look. a few of my guys have action positions in this. Obviously, good recent uptrend, very logical pullback, entirely expected, and the expectation is that this starts to move back towards 100, and that's absolutely a good return. I mean, if that moves back towards 100, you're talking 27-28% likely there. So NVCR, if it's not on your radar, it probably should be. NVTA, again, a couple of my guys were messaging me this morning about it. Support at the 200 MA, although it's not a trade that I would personally take. It doesn't really fit with my rule set. I feel like it's one that's worth highlighting, because I know there's many of you out there that prefer the swing trade style, and you're looking to maybe get in and get out a little bit quicker. So yeah, I think NVTA is maybe one that you might want to consider there. Microsoft, I think Microsoft makes a lot of sense now above this 140 level. I wanted to highlight this because at the moment, yes, we're in an uptrend. It's grinding higher at the moment. It doesn't really meet many risk to reward propositions at the moment. It doesn't make a lot of sense to take an entry in here. I think for me personally, I would just be looking to take an entry above this breakout level, and that seems like it's logical common sense to me. Problem with ENPH, clearly the stock had run, I think, something like 600% in the last 7-8 months. Now, for those of you out there that think that stocks keep running forever, they obviously don't. Now, we've had a pullback in this, and this is one I've highlighted as a pullback for a while. This is here for a reason. And I know that it's under attack at the moment by Citron Research, Andrew left, but I really want to highlight what we've got, what we had yesterday. Now, there's a lot of you that would have jumped in yesterday, shouting, yes, we found the bottom of the market, let's go. The market doesn't reward that, because quite often we get hit with these dead cat bounces, and this is a textbook dead cat bounce. You take away the Citron Research and the news events that can sometimes accompany the market or the individual stock. You need to remove that from the equation and just accept price for what it is and as is. And those of you jumping in on the first green candle are opening yourself up to exactly what happened today. It's a textbook dead cat bounce. It's in the textbooks, and it's something that's easily avoidable. I think the one thing that I understand better than most is that you cannot really pick the top and bottom of price, but what you should really be looking to do is really just eat the meat within the sandwich, if that makes sense. It's a rather strange analogy, but that serves me very well, and it does help to remove things like dead cat bounces. So I think with the NPH, where does it go from here? Who knows? I think it's obviously become less appealing. I would be observing the key support levels to make sure, to see where we might get a bit of traction. Maybe buyers will step in at some point, but like all good trends, they do come to an end eventually. The other argument to be had is that we've got a textbook primary with a secondary trend, and we all know what the third trend looks like, so that's a consideration as well. So until price demonstrates to me that it's ready to rebound and take the next leg higher, I'll quite happily just sit on the sidelines with the NPH. Caterpillar is starting to look a little bit interesting. There's quite clearly good news coming out of China at the moment. We've not had a resolution. That's the first thing to say. Caterpillar has absolutely been affected by the trade war with China. We just need to look at the history of price. I've talked about this a few weeks ago when we were flirting with this support level. I was advocating potentially shorting the stock below this level. Lo and behold, that didn't happen. We've had a rebound. So the next level I'm going to be watching is this level here. If you can get a breakout here, then the expectation is that Caterpillar will move off to the upside. and if it rejects, then it's probably a short down there. That's just common sense to me. I understand not everybody can do what I do, and I suppose dedicate 6-7 hours a day to the market, and obviously technical analysis and the amount of charts that I filter through on a daily basis. I understand not everybody out there can do what I do, so hopefully this just kind of helps in some way. Now, this is actually a chart that I discussed with one of my clients this evening. This is for Kraft Heinz stock that has been beaten to death. It's been moving sideways, doing nothing, but it's now starting to slowly look appealing. Now, I don't want to touch on Bilkowski's work too much, but when you have an understanding of what chart patterns are effective, what chart patterns are ineffective, what ones have high failure rates, which ones have good anticipated percentage moves, either to the upside or downside. When you can rank the chart patterns, it makes all the difference. Okay, now I'm just going to highlight this. I'm just going to simplify it. We've got a rounded bottom, cup formation, and if we get a breakout here, for those of you that are in Kraft Heinz at the moment, there is maybe some light at the end of the tunnel. I know it's probably been a slow grind for you. Many of you are probably crying into your cheese at the moment. Sorry, I laughing at my own jokes. But yeah, I think the breakout here, and I think if we get a move above this level, then that would certainly be a bullish move, and it would become appealing to me. So if KHC isn't on your radar, you might want to just add it to your watch list. I'm not saying jump in at the moment, but it may be interesting in the next couple of weeks. And I think when we observe the overall market, like I said right at the very, very start, this is all market dependent. It's dependent on what happens with the major indices. You need to observe the overall market. It's not just about your individual stock. And if you have enjoyed this, please do subscribe to our channel. If you're somebody that struggles a little bit, maybe you don't have the consistency that you want, maybe you find yourself consistently stopped out of position after position and trading isn't really working for you, I'd highly encourage you to go and have a look at our website, honeystocks.com. We deal with technical analysis. We are mentors, tutors, whatever you want to call us, and we teach the art of technical analysis, and we don't overcomplicate things. And hopefully that's apparent from the presentation you've just watched. The unique thing about what we do at honeystocks.com is we publish every single trade idea that we post to our client group. We're very much quality over quantity. We're not jumping into 20 trades a day. We're not sending out alerts 5-6 times a day. We've got a very quality over quantity approach, and I think if you had been part of the group since January, those are the trade ideas that we've published to our group. The results kind of speak for themselves. 2018 is all logged on our website as well. It all conforms to the code of ethics that I need to follow with the CMT Association. Every single trade idea is published. There are absolutely no omissions whatsoever. So if you're somebody that is out there and you're learning from losses, these are generally the types of people that we can help. We can't help you to day trade. We can't help you be a better day trader, unfortunately, because that just brings a lot of inherent inconsistency. We've got a very trend following approach. We like to be in trades for weeks, sometimes months if the trade is going very, very well. And if you want to get away from day trading, and maybe you're trying to fit trading around a career or a business, if you want better consistency, feel free to check us out. We've opened up our calendar for the weekend, so if you want to talk to us about improving your trading, we're not going to try and throw something down your throat that you don't want to sign up to. If you are somebody out there that genuinely struggles with your trading and you want a little bit of help, feel free to book in a call with us. Just this week, I've had, I think, 10 or 11 conversations with traders around the world and been able to help in some way. Not everybody signs up, and that's okay. I just enjoy talking to people and obviously helping people as well. So thank you very much for watching. Appreciate your time, and maybe I'll speak to you soon. Thanks.